Hello everybody, welcome to Monday Morning Must Knows. My name is Merlin Rothfeld, and here are 3 important things to pay attention to for the upcoming trading week. Now on Sunday, Independence Day, America's independence, that brings in a couple things that are noteworthy for the financial markets. Namely, Monday, all U.S. markets are going to be closed. So you know what? Don't do anything with the markets. Maybe study, read a book, research, but go out with your family and friends, have some fun, enjoy life. What this means for the markets going forward, though, is a very light trading week. Historically, holiday weeks, especially when one day is closed, are very low volume weeks. This creates a lot of extra volatility, and what we end up getting is people generally taking Tuesday off or maybe even Friday from last week off to get that nice long extended weekend and go somewhere because, hey, we're coming out of COVID. Let's celebrate our independence by going somewhere and doing something. So be careful this week. You could have very low liquidity in our financial markets. Now, let's move on to some real pictures and tangible stuff. Let's talk about central banks. First one we want to look at is the Reserve Bank of Australia. Now, they have been cutting rates for quite some time. As you can see here, they're pegged to the floor at 0.1%. Now, this is by design. They have said specifically, we want to weaken our currency. Are they doing it? Well, as you can see, it has been getting weaker over the past few weeks. More importantly, it's broken below some key demand zones. And if that trend continues, there will most likely be further downside movement in the Australian dollar. And of course, the Reserve Bank and their press conference after that will be very critical in the trajectory of the Australian dollar. Now, moving on to another one, which is the Canadian unemployment rate, Friday at 8:30 Eastern Standard Time. We normally don't put a lot of emphasis on the Canadian unemployment numbers. However, it feels like right now, if you look at the price charts, that they are searching for something to give them a little catalyst in their market. Here's a peek of the Canadian dollar futures. Now, if you look at this, you can see that it has been overall for this chart here on a pretty nice uptrend. However, it has been showing some weakness recently. See that nice big rounded top there, and on the right-hand side of the chart, just another attempt trying to get back up there, didn't make it, failed, and is now coming back down, forming a pattern that people call an inverted cup and handle. This is actually a very bearish pattern. And if we look at the current trends of the Australian dollar and the Canadian dollar, they're both getting weaker. And I don't have a chart of it, but the US dollar is looking really strong right now. So when you have the US dollar really strong, most likely that's going to continue to put pressure southbound on the Canadian dollar as well as the Australian dollar or anything that's traded against the US dollar. That, my friends of the Monday Morning Must Knows. We'll see you next week.